Hey everybody, Real Estate Ninja here. Let's talk about commercial mortgage-backed securities. Let's talk about problems in the market. I got a story here out of globest.com and it's entitled KBRA Sees Risk Ahead for Many CMBS Loans. It says, as the country entered the uncertainty of 2023, valuations and the need for price discovery have become growing issues in commercial real estate. In some areas, valuations have been taking a large drop. Finance costs are a challenge, especially if plans originally had involved cheap interest rates and large degrees of leverage. Expectations of ongoing large rent increases have already run their course. Let me stop and give you a little bit of a basis for why I wanted to talk about this. Mortgage-backed securities are what took down Lehman Brothers and the entire financial system, literally, and it reverberated globally in 2008. Mortgage-backed securities were a bunch of mortgage notes that were tied together, bundled into investment pieces, securities, and they were sold to investment house trusts, pension funds, things like that, right? They were in all kinds of different instruments, financial instruments. And when we found out later that many people were not paying on those, what happened was that we were finding out all kinds of fraud, like they were salting these funds with good paying properties, right? Good credit scores. But maybe that was 10% of them that were up top and you could see them, but underneath, like an iceberg, you know, underneath that is massive. It was a ton of people that weren't paying on their mortgages, right? Well, commercial mortgage-backed securities, this fraud that's going on is much bigger than mortgage-backed securities, and I'm telling you about this now, and this is what is going to break the back, I believe, of Wall Street and the real estate sector. This is why one of the parts of my real estate crash course is going to be why you are going to want commercial properties in your portfolio, but you're going to be buying them at literally rock bottom prices. And that is going to separate you from, you know, a real estate millionaire into a real estate multi-millionaire. Commercial mortgages are harder to get, but once you attain a commercial property, you set yourself completely separate and different than other real estate investors. And I want that for you. And this is going to be a great opportunity, but this is going to be scary times, but not for a while. The fraud is here, and I'm going to start reporting on it more and more. But this is very interesting because think about how many commercial buildings are completely vacant, but they were full in 2018, 2019 before the pandemic. Now they're vacant. And there are not enough, with advancements in technology like Zoom and other platforms, companies do not need the square footage they used to need to house employees for productivity for their company. It is just a fact. And so there's going to be tons of opportunities to rezone commercial properties. I don't want to get ahead of myself. It's going to be in the course, but there's going to be a lot of opportunities in the commercial mortgage space. The commercial real estate space. It says right here is a quote: "We're moving from a 15-year artificially inflated environment of low interest rates and value inflation that the Fed created to keep the economy going, and the real estate in particular benefited from," Eisner Advisory Group consultant Joseph Rubin told GlobeStreet.com in the fall of 2022. "We're now probably going to revert to the historical mean here. With that much fog, it's no wonder that the question of what properties are worth seems to be coming up with the lenders. KBRA thinks that the appraisal reduction amounts, or ARAs, in CMBSs, which are commercial mortgage-backed securities, are a sign that needs attention. With the economy continuing to contract, property fundamentals weakening, and prices under pressure, KBRA believes that CMBS ARAs have reached an inflection point. The company wrote, in the coming year, we expect to see more ARAs get triggered due to higher loan defaults, as well as increased ARA amounts as property valuations decline. In addition, we also analyze their reliability as an indicator of future potential CMBS loan losses, as well as how deals with high ARA exposures can result in the shift in the controlling class." Man, there's a lot to take in there. The fact of the matter is, commercial mortgage-backed securities were held at this high, esteem, right? If you were invested in them, it was a solid reoccurring cash flow model because commercial mortgage-backed securities had a lot of strength, right? As the economy was coming out of the Great Recession and these low interest rates fueled a lot of commercial buying activity, those companies that were in there and building based off of low interest rates, right? So let me give an example. A tech company rents a big building from a fund that owns a commercial property, right? And it's got a loan on it, a mortgage, commercial loan on it. They're building in Silicon Valley. This company's building, it's getting stronger, right? But it's getting stronger because it's able to access cheap money from the Federal Reserve through local banks or large institutional banks. They're able to build their company, that silicon-based model, and they are always making that rent, until things go awry. And one thing that's going awry right now, and most people don't realize, is that in the commercial world, not everybody is buying large commercial buildings with fixed rate loans. They were buying them in the last 1/3 of this time frame between the Great Recession and now. They were using variable rates. And that's very dangerous. But they were used to, well, rates aren't going to change. Fed's not going to change rates because the economy's growing. Why would they raise rates? See, until inflation came in, reared its ugly head. But so now it's going to take a ton of people by surprise. And we're already seeing tons. And I'm going to start covering it here more because it's not being covered a lot. So many commercial mortgages are starting to go into default or they're in late payments. And people need to realize how big of a deal it is. Even though you're in residential real estate, it's going to affect you. Why? Because the more of these that fail, the more the Federal Reserve has to move to prop things up. And that is going to bring down the value of the dollar. That's where you need to watch. And that is exactly what happened in 2006 to 2008. The dollar's value was waning and coming down because of people not having confidence in what was going on in the real estate sector, because real estate wealth effect took up so much of our country's wealth. All right, so people need to understand that. So I'm going to start to do more of these, guys. If you haven't subscribed to the channel, please hit the subscribe button, and thank you so much for your thumbs up. I really appreciate it. But this is going to be a larger story in the next 6 months, and so we'll start filming it here and covering it here. All right, guys, that being said, the Real Estate Ninja is out.